housing in the U.S. The last crash was 34%. That's the biggest crash we've had in history, modern history, in housing in the U.S. This one should take us back just to those 2012 lows. That's all we're doing with the second bubble, just back to those previous lows. But that would be 50% for the average house. And of course, so less in like the Midwest and places like that and parts of the Southeast, but more in places like California, Arizona, Austin. Those are the biggest bubbles, the West Coast and Austin and places like that, and Phoenix. That's where baby boomers are moving, Sun Belt. Everybody's now admitting we're going to have a housing correction, but they're saying it will be mild. They don't say it's going to happen. Then they finally admit, well, yes, but it'll be mild. Don't listen to these people, because all they do is follow the trend. When it's up, they say it'll hold up. When it's down, well, it'll be down a little. This is going to be the biggest crash in housing of our lifetime, and then we'll probably never see one again for decades. Housing does not crash as often as stocks, but these were two housing bubbles, rare in history, and the last one burst, and this one will burst the same. Housing prices have been very different. Unlike stocks, they're different in different areas. So it's best to target the lows. So whatever the house or market you're looking at, what would that house been in mid-2012 around the last bottom? That's the best time to buy. When you see housing prices get there, and I don't expect that until at least 2024 sometime. Well, yeah. I mean, this recession naturally would have been from 2020 into 22 by the demographics that I track. But the government, since 2009, it's just been stimulating. Things slow down, they stimulate more. So they've basically taken over the economy, and they created this second bubble. This second bubble would not have happened if they had not gone to long-term zero interest rates and made housing just a slam dunk to buy and make it irresistible. So they created the bubble, and now they're going to fight it. But I'm saying, yes, it did finally break. And once you break a certain amount, especially I'm looking at stock, and I tell people looking at housing, use the stock market as your leading indicator, okay? Stocks cracked first. They've tried to stop that bubble. Once stocks cracked over 30% in 2022, which they did, 34% on the NASDAQ, as soon as we go to new lows, it's going to crash again. The more stocks crash, the more housing's going to follow. I say the stocks are getting ready to crash for a second time. You want to sell your house before that happens, because that's going to be alert for everybody. So really, housing, you shouldn't wait at this point, because housing takes longer to crack, but it also takes longer to sell and freezes up very quickly. This is not a buying opportunity in stocks, and if it's not a buying opportunity in stocks, it definitely is not in housing. And you'll have plenty of time for buy opportunity. Housing took years to turn around. Stocks bottomed last time, in early 2009. Housing didn't bottom until mid-2012, 3 years later. So housing, you'll have plenty of time, but stocks, you're going to want to get back in, I would say around summer, July 2024. That's when I would expect a bottom. The other thing we have to realize here, although everything's following like past booms and bubbles and stuff, this is unique because never before have governments created and then also fought the bubble burst. The Roaring '20s bubble was a natural bubble. Even the '90s bubble, tech bubble, the first tech bubble was largely a natural bubble. You get storing, tech's doing really good, ripping off on its 45-year cycle, new technologies moving mainstream at the speed of light, and investors just overvalue it. They always will. This time, it's all been government stimulus, pouring money into financial assets. That's what they buy when they inject money. They buy financial assets, inject more money into the whole pool, and all financial assets go up. So now we have an everything bubble. So everything falls. This, to me, is what's going to go down in history as the greatest crime. You should be running surpluses or at least balanced budgets in booms and then run the deficits to stimulate in downturns. We've been running the greatest deficits in history than the greatest boom in history. And then, of course, we'll have to stimulate way more when things fall apart. This is going to look like extremely bad policy in history, and it's going to look at extreme bad policy to create a second artificial bubble that then burst even worse than the first bubble. And that's what's going to be the story here, I think, in the end. So it's going to look bad, and I want it to look bad. I don't want governments to ever do this again. After the 20s bubble burst, we didn't see bubbles anywhere for several decades until recent, until the 90s, okay? Why? People remembered that crash. That crash, 25% unemployment, 89% stock crash. We get 50% stock crashes, 60% once a generation, but 89% for people retiring? Oh my God. My point of view has been, look, this entire stock market bubble, this second one, has not been due to the economy. The economy holding up and the stock market going to new heights by far has all been because of stimulus. Just a pause would cause this bubble to burst. And now they're just going to tighten less. So I think we still continue to crash here. But what I am looking for, the sign to me that we're going into the next phase, which could happen anytime, we break that last low on the NASDAQ, we break that low, then the next wave, which has already started, accelerates, and then we know we're in a deeper crash. And there's a point where consumers change, investors and businesses change their point of view, no longer think the Fed's in control, no longer think this is just a little minor recession or a minor crash, and everybody pulls back and you can't stop them. And then we end up going down for a good while. Look at it as the buying opportunity of your lifetime. Now, this is rare. Even in the Great Depression, the 29 to 32 crash, this didn't happen. Real estate reacted differently than stocks, and commodities crashed way before. Everything's going to go on sale. Commodities, gold, real estate, and all sectors, high and low, luxury, not, stocks, things that bubble. The greater the bubble, the greater the burst. So you can use that as a simple guide. All you do is get out of the way. Be safe. If you protect your money, okay, you're missing, well, maybe the markets claw back some and maybe this thing doesn't go as low as I think. If it keeps going down, everything's going to be on sale. And the only way to take advantage of that sale is to be liquid, to be in cash or high quality bonds that preserve your value or grow. And then you turn around. That's why I said, if these bonds do bubble, this will be the last bubble from my point of view. The final bubble in all these bubbles will be the treasury bonds, the safe haven that go when the bubble crashes. If those bubble, then you sell those and you convert those back into long-term growth assets like real estate and stocks, all the things we like to own long-term. So you just have to say, look, things bubbled up. It wasn't anybody's fault except for governments for overstimulating, but it wasn't any of our faults. Look at bubbles. That's what I've done. I've done the research for you. This looks exactly like a bubble, quacks like a bubble, burst, bubbled up just like the last one from 95 to 2000, bursting just like the last one. And if it does, it's got a lot farther to go. Be safe, be liquid, and the world's your oyster just a year and a half from now, probably. A year and a half, everything's going to be on sale. And you know what, at that point, people will be too scared to buy. They're going to say, well, everything's going to hell. No, that's when the smart money buys. If you know it in advance, you can be the smart money. If you're reacting on the way down and then you finally panic and sell half the way down and then it crashes, you're all, shell shocked. You're not going to even have the intelligence to buy when you have the sale of a lifetime in front of you. You'll never see stocks or real estate or anything you're in at these prices again, just like nobody saw them after 1932 to 33, ever again.